Intel's profit fell 14% in its third quarter as the chipmaker was impacted by the secular decline in personal computers. Spanish bond yields hit 6-month lows after Moody's affirmed the country's investment grade rating. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the morning call. Yesterday we got a great follow through in the market after a nice bounce on Monday, and this morning we're setting up with a positive tone, despite the misses from IBM and Intel last night. Scott, how do you see the move in the market? Where do we go next?
I think a lot of people telegraphed Monday because we touched the 50-day on Friday. That was a good spot to cover some shorts. Monday was good to test out some longs, and I think that if you were long going into Tuesday, you were pleasantly surprised. No one really expected the strength we were going to have on Tuesday, and I think that made the bears say, you know what? I have to take a step back because this might not just be a feeble bounce. That 1425 might be the low that was set on Friday, considering all we had is about a 3% correction in what has been a very strong year. I think we're up like 17, 18% on the S&P, more than that on the NASDAQ, or somewhere right around there. So, to retest areas that we broke out from is very healthy, and you never know when they're going to hold, but if they do, you have to just, identify what took place and switch some gears.
So let's take a look at the chart and see what levels you have your eye on today.
Well, we were just talking off camera how if you look at the overall chart, it just looks so easy. Yeah. And obviously hindsight's 20/20, but you look at the macro chart here and you look at what's transpired over the course of the past year, from the low in October to a quick little move back to resistance, and then you had this macro wedge that took place that broke to the upside in the first quarter, where you followed the 8-day moving average the whole time before finally it got faulty. Here is that head and shoulders top pattern for a brief correction, which was only about not even 50% of the move from here, and then from there, look at this, another uptrend all the way up with a lot of different buy strategies, like here, another one here. And then this is what everyone was complaining about. Look at this tight consolidation. What did we do? We came in, tested the trend line, which also, pretty much lined up with where we broke out from, right into the 50-day. So now from there, you've had a 2-day move. I would say at this point, I would really like to see the market pause. I'd like to see it pause around this 1460, 1463, go a little sideways. But this pattern is telling me that it's only a matter of time before we break out above the highs. We've talked about, I think, 1550 to 1575 as the measured move of that overall cup and handle pattern. Some say it could happen, fourth quarter, first quarter next year, but it just looks like at some point it will get there, and then even more, that 1700, 2015 target. But anyway, it's October. There's still a lot of trades between now and then, so just make sure you know your time frame.
Yeah, time frame is key. Let's take a look at some of the sectors that after this 2-day move in the broader market. Let's see how some of the sectors are holding up. Let's start with retail. This market saw a short downtrend in the last week, but the last 2 days it's been up. It's back above its moving averages. If the market is to continue to digest like you'd like to see, what do you expect this group to do?
This group is not outperforming. It was definitely a leading group most of the year. Recently, I'd say in the past, few weeks during this pullback, what you want to do is you want to see what acts the best, what holds in higher. And if you look at the XRT, you will see that you overlay the chart of the S&Ps, and there's not much alpha being presented right here. Maybe in individual stocks, which we're not getting to right now, but here was your brief red dog reversal, traded below support, came back above. That's a nice entry right there for a trade, 62.09. And then you had a little follow through yesterday. I would say that there's still some room here. You have a downtrend developing. At some point it could hit this again, get a little, maybe have a little resistance there, then at some point it can continue. But overall, lots of groups look good. This one just looks like it's in line with the market right now.
Okay, the financial sector, they really gained some momentum. They were going strong going into earnings, but now it looks like the momentum has stalled. Yesterday, they put a doji in at higher levels. How does this group look to you?
To me, this group still looks like it's going to have a leadership role. It did put a doji in yesterday, but it's had a big run. It actually is at that downtrend mark already. So if you look at the chart of the XLF, you will see that, look at this downtrend in check right here. It's already there, where the spiders aren't there yet, XRT aren't there yet. This is there. So to me, this is showing you strength. You're still following this really nice wedge type formation. It's above all the moving averages. The financials should continue higher. I know yesterday Citigroup was in the news with Goldman. We won't get into that. Bank of America we'll touch on later. But overall, the XLF looks good, and I think that banks are the place to be. You just have to be a bit more methodical because there's not a lot of momentum in the names, but they continue to work themselves higher.
Okay, the metals is a group that has been acting better since the end of September. Yesterday we saw some of the names in the XME like Cliffs Natural Resources, Alcoa, U.S. Steel. Those names were some of the better reporting names yesterday in the market. But this group, I think investors have their eye on the 200 moving day average as it approaches that. Do you think they could gain the power to break through that level?
It's trying to. And sometimes laggard groups get a little stronger, and this group looks like it's getting a little stronger. So if you look here, you'll see on a short-term basis that this group, here's your 50-day moving average. It didn't even get down to the 50-day moving average. So when technology busted through it and the spiders, tagged it, this held above it, and now it's getting above this recent little area. So as a laggard group, it's gaining some steam. So I would definitely take a look at this group. Like you said, Cleveland Cliffs, some of these other ones have some viable patterns. So I would take a look there for some opportunity.
Technology, as you mentioned, had a great day yesterday. They were up 1.4%. It was nice to see that enthusiastic rally in this group. It's now in front of its 21-day moving average. Do you think we can see more upside, or do we need some digestion here, just like in the market?
At this point, this is the group that has a lot to prove. This is the group that led us lower. So this was the one that, snapped back better yesterday, but, there were a lot of shorts in there too. So if you do look at the chart here of the Qs, it's coming back to retest this broken neckline. So it's going to be very interesting to see what happens right around here. So I would think first time it gets here, it should pose a little resistance. You probably should be able to, to short somewhere in this 68.40 or fade, or if you bought on this little reversal held yesterday, maybe you sell some. I think it's down a little bit based on Intel and IBM, but overall, nice little snapback. Here's your resistance. If it can go sideways a little bit and hold at least half of yesterday's nice gains, put in a little bit of a flag type pattern there, then I think it'll have enough power to push through. But for right now, this group has the most to prove, as it was the weakest going into the last few sessions.
Yeah, it makes a lot of sense. The home builders have been a strong group all year. Yesterday we got the NAHB survey out and we got some positive news, but the group put in a doji candle, so it just begs the question, where is this group going?
This group, to me, still is the leading group. It definitely, it's going to have its little spurts and it's going to stall. But at this particular point, every time we get positive data, it's been coming from the U.S. housing market, that it's thawing out, gaining some momentum. It's for real, blah, blah, blah. P.S. the action of the market in these stocks this entire year has shown, positive relative strength. And if you look at the chart here, you will see that, again, you saw the Qs break through the 50-day. You saw that, the S&P actually, touched the 50-day. Look what the Qs did. It held support and didn't even get there. So the XHB, which is that proxy, stalled a little bit yesterday. So I think at this particular point, it could take some time to continue to go through this channel and absorb what's been, an unbelievable move to the upside. So I do think if you're long this sector, this group, watch it close, stay with it, and you might be able to get into a tier 2 or 3 because this is where the money's been made this year.
Okay, well, we've got to take a commercial break right here, but we'll get back into it with some specific stocks after this.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into the trenches with some of the stocks that have reported earnings this week already. We'll start with Citigroup. Yesterday, this company dominated news flow when their CEO decided to resign, Vikram Pandit. This came a day just after they reported earnings, so it kind of confused some investors. But if you take a look at the stock, it didn't do much all day until the end of the day. It really saw, gained some steam there. Do you think that this change at the top could lead to more upside in the stock?
I just think a lot of people just sold as soon as they heard the news. Sell it, and it was down like $1, down 90 cents, and shorts were trying to pound in there because it's had a big move. So for this stock to be able to absorb the headline of its CEO stepping down, go positive and then get some power, that just shows you, how you can't be stubborn in this market. The stock started acting much better weeks ago. It started to show some leadership, and if you look at the chart here, you will see that, it broke to the upside right here with the, with the rest of the financials on September 6th. Had a nice move, consolidated again, gave you another buy price right there, and then here was your last little pivot. And on earnings, it had a nice move. They couldn't sell it like they sold down JP Morgan and Wells Fargo on Friday. That also helped the market. And then yesterday they tried selling it down and it closed near the highs. So today it's probably opening up a little bit. I'd say if you're in a lot of Citigroup, it doesn't, you definitely could sell some up here. I think that it's been a heck of a run. Sometimes you get back to old levels here, and here's an old level, and it could bring out some sellers. But overall, it does look healthy. I would say if you're looking for an entry and you're not in Citigroup, I would definitely wait, wait for it to hit the 8-day. It's been following the 8-day moving average most of this move, even tagged the 21 here. So I would give it a little bit more time before you just initiate a trade, but if you're trying to just short this thing, you're probably getting your head handed to you. So, maybe there's a Q1 versus 38, but I just think there's easier trades out there.
IBM reported earnings last night. They actually beat EPS but missed on the revenue line. I think what really concerned investors here was commentary by the CFO, who said that the third month of the quarter was slower than the first two, igniting macro concerns and sending the stock down 3% in after hours. This is an Action Alerts Plus name that Stephanie Link owns. Of course, she's buying on the dip because she thinks it's more of a macro concern than company specific. But is there a trade here, Scott? Is this something you're going to look at today?
Yeah, well, if you're coming in flat and you don't take stocks into earnings, this is definitely an opportunity to at least look at it and see how it trades. Lots of times, these stocks will, open down emotionally, and then within the first 15 to 30 minutes, put a pivot low in, diverge from the futures, and give you a good entry. So if you want to put some levels in front of you where if you weren't in IBM, and you're looking to get long, here's a few. So the first one that I would say that if it's any good and has any chance of, staying in the game, over the next, 1 to 4 weeks, it should hold the 50-day right around this 203. You have a short-term level right here, which it tried holding after hours around 204. So I would say after closing on the highs, first of all, you had to have a big risk tolerance to take this thing. Considering the type of move it had off the lows, considering how close it was to the highs, it had to be a blockbuster report to continue. So right there, that to me was a little bit, of a red flag where be careful. So again, if you didn't take it, this is a good spot. I'm actually going to look at it, see if it could hold in around this 203 for a trade. If it doesn't and it closes on the dead lows, I would wait and then see how potentially it handles this 196 to 198 area. I'm sure at that particular point, most fundamental analysts will come out with both hands and try and buy it here. I don't think this happens today. I would say, this should contain the downside if IBM's any good. If IBM doesn't bounce off here and continues lower, I do think the market's going to have some problems today.
Intel also reported earnings last night. They beat estimates, low estimates. Analysts had really lowered their numbers going into the quarter because of their exposure to the PC market. The stock was up 3%. It gave all of that back after the company reported. This stock has just been a weak one all year. I think that their exposure to the PC market is really going to continue to hurt this one until they can prove that they can be a formidable player in the smartphone or tablet market. Is there a short here? Is there any trade here? It's been a bad stock all year.
I just think it's still in the void. Okay. Every now and then maybe there's a cute trade, but this stock was acting well, a year and a half ago, last year, but last quarter or 2 quarters ago, it just became on sale, and rightly so. The world is moving to tablets. No one's going out really and buying laptops. I don't remember the last time someone went and bought a desktop, unless you had to. So with that said, that's where the nuts and bolts of that business was. And you've seen a whole shift from Hewlett-Packard, from Dell, from Intel, from some of the semis, unless they're really involved in the nuts and bolts of the handheld mobile market, iPods, iPads, phones, whatever. Anyway, you look at the chart of Intel, and it showed you that. And if you look at August, the market from the lows in June, so to speak, this was the market hit a low in June and went up. Intel hit a high in June and went down. So that's something you avoid. It's it was below all the moving averages coming in. I guess it could have been good for an oversold bounce, but it already did that 2 days prior. I would say at this point, some traders might try and look to see if it can go from negative to positive as if, this bad quarter is washed out. But I don't think it's just a quarter. I think it's a trend. And at this point, I would just avoid it because there's no need to be in the tough money.
Coca-Cola yesterday reported an inline report. Revenues were a little bit lighter, so the stock was down. The interesting thing here, though, is we are actually seeing execution here by the management team. They're gaining volume and market share across all their beverage units. And this quarter, we didn't hear some of the things we heard last quarter, like raw material costs, currency, and a sluggish consumer impacting them. So Stephanie Link actually owns this one, another one she's buying on a dip for a longer-term hold. What levels do you watch as a trader?
I think this one you have to be a bit concerned with. Anytime Coca-Cola has gone down for multiple months, it's typically a buy until it's not. But you can't say that. So as far as fundamentally buying it, if you have the time frame and you have the risk tolerance, okay. But technically, you look at the chart. I'm just going to show you, a big level here. If you look, on a macro basis, the chart to me does not look good. It looks like somewhat of a head and shoulders distribution pattern where here's your left shoulder, here's your head, here's your right shoulder, here's your neckline support right above the 200-day. So I would say if you want to try and be in it, maybe be in it versus yesterday's low of 37.44. If it continues to hold it, I think it could stay in the game and then maybe needs some more time and then finally gets above 39. But again, this is your line in the sand. Here's your 200-day moving average. If you take a more macro look at the stock, to me, it's a little vulnerable. These patterns are good or are valid when they trigger, when you break below it on volume. So until that happens, if you want to stay with it, fine. But if you're not committed to Coca-Cola long term, it breaks this line in the sand, you could see some more corrective type action. So I just would be a bit careful.
Okay, we'll hear from Pepsi today, actually. They report their earnings. Goldman Sachs, another one, reported earnings yesterday. They had a great beat on EPS and revenues, yet the stock had a push-through failure. So what does this mean for the stock going forward?
I don't think it's game over. I just think it's kind of like JP Morgan. JP Morgan was near the highs. It came out with good numbers. People started talking about was a loan loss reserve, what was it, blah blah blah. PS, it's at higher levels than it was then. So if you look at yesterday as far as a trade, it did push through a previous high and fell. So to me, to short-term guys, some guys made money on the short side here. You do have a nice trend where it's been following the 8-day moving average, so that's that's something you could continue to use as a roadmap. Here is where it broke out. It's been providing leadership and been so much a much better trade. Since those August lows. At this point, can it use some time? I think that as long as it stays above this trend line, I would say as long as it stays above, just say this 121-ish. I think it's in the game to just keep continuing higher, and you'll see higher prices this year. If it breaks this area, you could see a little bit of a pullback, and then it hasn't broken this 21-day moving average since, since the lows. So, that's your roadmap right there. I think that with some time, it'll continue. I don't think that it gets below this 119 though, and if it does, then the market's, needs more time overall, but I do think it continues higher.
Let's get into some quick hits then. On that note, we'll start with Bank of America because they reported earnings this morning. They beat estimates. It's trading up in the pre-market. Where do you think this stock goes?
I think the stock's been acting much better, and people that want to play a little catch-up are going to see, I could buy a gazillion Bank of America. It's only $9.60. I talked about it in August. I put a big option play out there on Bloomberg, a call spread. I wanted to do it for the fourth quarter, and meanwhile, it fulfilled its potential of 100% plus within the first 3 weeks. Anyway, what do you do now? You look at the chart here and you'll see that right now Bank of America is brushing up against some pretty big resistance. Okay, and to me, I think it powers through. I don't know if it does it on earnings today. If it wants to, this is 980. If it starts breaking through 980 with any kind of volume, you're going to see the old highs. And and if it does so, you might even get to see $12 this year, which would be another 25% in Bank of America. You go to the weekly chart and you will see. It's coming into a big area, and then there's really no big resistance up until this zone. And then I even think next year, if we do get to my targets of 1550 or so, you might even be able to get 14. So 12 to 14 at some point next year makes sense. and there's really not that much volatility in it. You could buy a decent amount of shares and stay with it. So at this point, I think Bank of America, with the housing recovery and with Merrill Lynch starting to fire back on some more cylinders, I like it longer term, and every now and then there's a trade. So I think traders will watch it today, but this is something investors just sit in and let it methodically work out, and then even sell some calls around, based on the timing mechanism.
Okay, how about eBay? This is holding its gap up since its last earnings report, but it's been choppy going into this earnings report.
Yeah, for some reason, it always feels like eBay is choppy going to its earnings report. And then it goes choppy, 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 then beats, guides up, and you get a big gap. I don't know if that's going to be the case today. You look at the daily chart of eBay. Look what happened the last two times. Here you had a choppy, choppy, choppy mess, gapped up. There was your gain, and then it became a choppy mess again before trying to break out, and then came in. Here was your last earnings. Went sideways. You could have bought it afterwards, and now it's choppy and it's hard. You have to be a full-fledged eBay fan to be an investor in eBay, because trading it is it could drive you to drink, and not even on Thursdays. So with that said, I'm a tiny bit skeptical, because it just feels too easy, where the 2 quarters ago, gap up, made money. Last quarter, gap up, made money. People are probably thinking, oh, it'll probably just do it again. So sometimes the market likes to trick everybody. I would say so. I would avoid eBay into earnings, because it's giving you enough opportunity afterwards. And if you've been long it for, looking at the weekly chart, what's been a heck of a move, maybe sell some in the money calls. Yeah,
Stephanie's betting on the earnings gap, because she bought it just recently going into the earnings.
Okay.
But and then finally, let's look at Apple though, just because it yesterday had a nice 15-point move along with the Qs.
Yeah, and this one finally helped the market also. Put a double bottom in right by the 100-day moving average. It's been a really good two-way trade for the last 3 weeks. I know the media has been having a lot of fun talking about it, because it's been moving around a few percentage points each time. This time it seems more to an upside bias. Look at the chart here, you will see. I still think there's some room left. Yesterday, the last 2 days have been very strategic to the buy side. So you go to the chart and you will see that, here's where on Monday it held the 100-day again. For these few days, I had no position in Apple. Got long Monday, held it yesterday, added some through the highs here. We were talking about it on the chat room. Gave you another buy even right here, as across this little area. And it has some room to at least retest, maybe, the 660 to 661 area. Here it reclaimed the 8-day, which it hasn't done during the course of this whole decline. This is when I sold it at around 683, but when it became a two-way trade, when it broke this key moving average. Now it just reclaimed it. So I think there is some more upside. It might take some time to digest yesterday's gains. I think if the stock's any good, it shouldn't really get much below, just say, 642 to 644 to show commitment to this bar. And then if it trades above yesterday's highs, I do think that you can get a move to, again, close to 660 before maybe they try and pull it back for option expiration on Friday around 650.
All right, that's all we've got time for today. So those are the stocks we're looking at, the sectors we're looking at, and the levels in the S&P that we got our eye on. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.